stock to talk about today on the back of a very big corporate announcement is EPL. That stock is surging on the back of its merger with Indovida. My colleague Sajid caught up with Mr. Hemant Bakshi, the Managing Director and Global CEO of EPL, to understand the rationale behind this merger, the financial synergies and the way forward for the combined entity. Listen in.
If you really look at EPL, we really are in a strong position. Last 3 quarters, we've delivered double-digit growth. Our EBITDA has grown by 310 basis points in the last 3 years. So it's really a strong foundation. And ever since I've come, our vision has been to become the emerging markets consumer packaging leader. So that's really the vision. And there are 3 important pillars in that. The first is we need to go into more emerging markets. The second is we've been a very successful tube player. We need to expand formats and look at other things. And also, we need to become innovation partners for all the customers we serve rather than just suppliers. So those are our 3 pillars of our strategy. And this merger, which we are talking about, is really something which works very well with this strategy. So firstly, it gives us scale. With this, our revenue doubles with the merger, our bottom line doubles, and our valuation goes up to $2 billion. Secondly, this is margin accretive. So with this, both our EBIT and our ROCE will improve. Thirdly, it also gives us better cash because Indovida is completely cash-free, and therefore our debt to EBITDA ratio drops to 0.25 only. In addition, we go into a number of growth markets. So from many perspectives, this is a really, really interesting proposition for us. But also, it comes as very attractive valuation. Our business is being valued at 12.5 times EBITDA, which if you were to convert into share price is equal to 339 rupees. Currently, we trade at about 205, so it's 70% higher than that. But also, we are at 55% premium to the Indovida business. So in some ways, it ticks all the boxes on our strategy, gets us into new markets, helps us get into a new format of rigid packaging, which is a TAM of 100 billion, and also helps us get a lot more technology.
And with that, there's a management change also which comes into play, right? Because now Indorama Group, Indovida is part of that, will have a 51% stake in the entire venture now. Blackstone stake reduces from 20% to 16%. So it becomes an Indorama company as well?
Yes, that's right. So Indorama and Blackstone will be joint promoters for the business. Indorama, as you rightly pointed out, has 51.8% stake in the company, and Blackstone will be 16.6.
So you mentioned about the fact that there's an EBIT increase which is there. So you're going to hit almost $1 billion in revenue. EBIT would be positive. EBIT percentage would be positive there.
Yeah, EBITDA will be about 200 million. So we are 20%
on the merged scale of based on the
revenue of 1 billion.
This is prospective or the retrospective?
Last calendar year,
last
2025.
CY25, which is there. And you're growing at 20-25% every year, right?
So our growth has been double-digit. That's been our growth rate in the recent quarters.
So, you know, Indovida has been valued at a discount to your valuation.
That's correct.
Where does this synergy bring in that additional EBIT into this?
Yeah, so this current valuation is based on our historical performance, does not build into the synergies. The synergies are over and above this. So we think there will be synergies of 35 to 50 million on revenue and cost. A large part of that will come through geographical footprint expansion. We have recently entered Thailand, where we leveraged the infrastructure of Indorama, and we were able to get into the market in 9 months. Normally, it'll take us almost 18 to 24 months to get into a new market. With them, we were able to enter Thailand in just 9 months. Now we have opportunities in other markets in Southeast Asia, like Vietnam, in Africa, Nigeria, Ghana, Tanzania, so we can expand our footprint. But also what's very interesting is that we have a completely new format. So they operate in rigid plastic, we operate in flexible. So now we have many more areas.
So let's, for the benefit of the viewers, when you say rigid plastics, it basically means PET bottles which are used for Coca-Cola, Pepsi,
That's
and others,
correct.
right?
That's correct.
And flexible means the tubes which are used for
toothpaste, beauty, cosmetics. So our marquee customers are Colgate, P&G, Unilever, L'Oreal. And for Indovida, it's Coca-Cola, Pepsi, Thai Beverages, Masan Group, Danone. So it's really the best companies in the world.
What about the kind of investments that the joint company will make on expansion? Is there a plan that you have in place?
Yeah. So as I was mentioning, our balance sheet is very healthy, and Indovida is net cash company. So therefore, we have significant now firepower to both invest in growth as well as inorganic opportunities as we go forward. Acquisitions will be a big part of our strategy in the future. And as I've looked at acquisitions, we are really looking at three things. Anything which helps us get into new geographies, helps us build new capabilities, and is margin accretive. As you can see, this deal ticks all those three boxes. But in the future, we will keep looking at similar opportunities to get to our vision of becoming the leader in the emerging markets for consumer packaging.
What is the kind of net cash between both the companies?
We'll drop to 0.25 of EBITDA.
That would be the cash that we'll be holding. And what is the kind of cash generation that will happen?
So we do about, Indovida is about 60% of EBITDA is the free cash flow. For EPL, it's about 40 to 45%. So therefore, these are both very healthy cash generating companies.
How are you managing the current crisis, the Middle East crisis?
Yeah.
Let me put it this way.
Yes.
Because both tubes and hard plastics require petchems and crude derivatives. How are you managing that?
Yeah. So it's a significant event, firstly. For us, working with our customers, the first priority is to ensure we have supply security. Our customers are very keen that we are able to ensure that. So our first focus has been on making sure we are fully covered in terms of all our raw materials, and we are protected till almost early June, and we are now planning beyond that. The second is the prices have gone up for most raw materials, but our model, as you know, is a pass-through model. And we are negotiating with our customers, and most of them agree with it, that we will have to pass on the cost to them. So therefore, those are the two priorities we have. I think in a situation like this, large companies which have scale tend to be advantaged compared to others. And I think we will come out stronger after this crisis because we are resilient. But at this point in time, I must tell you, all hands on the deck. We have to make sure we go through this crisis, adapt, and remain agile.
Give me a sense of the price increase that has happened across product profiles,
So
because polymers and all is the main one raw material for you.
So it varies. There are some polymers which have gone up by 70, 80%. But if you take a blended weighted average, it will be closer to 30% for us at this point in time. But this is a fast evolving situation. Prices are changing very, very rapidly.
Do you peg it to the crude price as well?
No, we are not directly pegged to crude, but they move in line with it over a period of time, but it's not directly
because crude prices have moved by only 50% since in the last 1 month.
So some of them move in the same direction directionally, but it's not a direct linkage.
And how do you look at inventory management? Because supply chain is critical for you, for your clients. How do you look at inventory management here?
So we have to make sure we have supply security. As I was saying, we are covered till end of May. We are now looking at early June. And we have long-standing relationships with most of the petrochemical players. And I think that's coming in very useful. So we are working with them, and our scale helps.
How are you looking at alternate supply chains? Because you have a good relationship with many of the companies in the Middle East or West Asia or GCC countries where the maximum refineries are there. Plus domestic is as well there. But what percentage of your materials are coming from the West Asia countries, and what are you doing for the alternate supply chain?
So we have alternate suppliers in Southeast Asia as well as in the Western Hemisphere. So we are working with them in addition to our partners in Middle East. So we have diversified in terms of where we buy our raw materials from. Our main production happens in India and China for laminates. And those are the two markets which we are most focused on right now.
And you said Indovida has facilities in Southeast Asia, and 90% of the crude requirement comes from the Middle East for them. Are they having an issue with respect to that?
So I think their advantage is that the larger Indorama group is a large manufacturer themselves, and therefore there is some advantage because the parent company is also making the raw material. So that helps in the supply security in a situation like this for Indovida.
When do you expect this entire merger to be completed?
So the regulatory process will take about 12 months. That's our understanding. So we are looking forward to the merger coming through in that period of time.
And how much time will you take to integrate your operations after that?
Oh, we should move very fast. We are very keen to make sure that the advantages, the synergies which I talked about, come through very quickly. And the synergies are quite significant. So we'll move very rapidly to get this done.